Good Friday traders, welcome back to the Forex Board Trading Academy. In this video, we will be analyzing the dollar against the Canadian dollar currency pair on the 4-hour time frame, as can be seen on the top left hand corner. But before we get started, I would like to remind you that information in this video is for educational purpose only, should not be considered as the financial advice. And don't forget to click the subscribe button and the notification bell to follow the videos that we do weekly. So let's get started at the analysis of the dollar CAD. What we have is the formation of the double bottom. As we can see, the bottom has been formed at 126.90, where the price is currently is. This was the original bottom. We can see that the downtrend trend line got rejected, so it found the support at this downtrend trend line, which actually became the average price downtrend trend line. And if we go on the daily time frame, we can clearly see that this was the bottom, then there was a spike, and then price failed to close below the spike. This means that this is still a double bottom, a potential double bottom. Moving back to the 4-hour chart, as this is a potential double bottom, we also have the bullish divergence on the MACD oscillator, which also suggests the potential reversal to the upside. Maybe it will not be the reversal, but at the very least, there should be some corrective move to the upside. What could be the case to confirm the bullish intentions for the dollar CAD? Well, first off is we can see that there is a resistance at 127.22, price produced spiked above, it reached 127.32. In order to confirm the bullish momentum, we need to have a 4-hour break and close above this level. And when and if that will occur, that might suggest that the price is ready to move up. Of course, if it breaks and closes on the daily below the spike, it will invalidate this analysis. But for now, it certainly seems like if price will manage to break above this high, we should be seeing an upside move. In regards to the resistance, we can clearly spot that the supply demand zone has been formed between 129.28 and 129.58. So there is a 30 pip gap for this resistance area, which also corresponds to this low and this high. At the same time, I have applied fibs to this last wave down, to this original bottom, and as can be seen, we have 50% Fibonacci retracement level at 129.28 corresponding to this low. So I think this zone could be extremely attractive for sellers. And besides, guys, we had a rejection of moving averages, both of them 200 simple and 200 exponential at this price. So this could be this upside resistance, key resistance, and I would not be surprised to see the spike on the daily time frame above this high, and then price will continue going down. We have the potential upside move of nearly 200 pips. Well, it's actually about over 200 pips if we're gonna go towards this high, which is highly likely because I would expect even price to spike above. So certainly a very interesting scenario on the dollar Canadian, considering that we had a bullish divergence and we have a double bottom and we had the downtrend trend line acting as the support. So multiple indicators are showing that this could be the double bottom, but we need to wait for the confirmation and we also need to stay above this low. Okay, so we are done with the dollar Canadian dollar. Let's have a look at other dollar pairs. So this will be the dollar Swiss franc. On the dollar Swiss franc, if you remember, we're expecting this correction to the upside and then continuation of the downtrend. So this must be the case for the dollar pairs where the dollar is correcting up now. Maybe there will be stronger pullback towards the trend line, also very possible, and then continuation of the downtrend. But this breakout, I think, confirming further bearish pressure. Nonetheless, we should be seeing ABC correction, and most likely it will take us up to this trend line somewhere here, and then price will continue going down. So this is on the dollar Swiss franc, what I would expect at the moment, which also corresponds to the dollar Canadian analysis that we just had. Another dollar pair that we have is obviously Australian against the dollar and the euro against the dollar. So now let's have a look at the Australian dollar. Here, the Australian dollar is extremely strong. Nonetheless, I think the correction could take place. which also corresponds to the dollar strength in the short term. So pullback would be reasonable, and then price will continue. We adjust it like that. So maybe we will see something of this sort of scenario for the Australian against the dollar, but the trend remains still bullish. Maybe it will continue, but you see the new cycle has just started, which might result in this correction. Another dollar pair is obviously the euro against the dollar, and here we have reached and rejected the uptrend trend line, but still it does seem like the price is bullish because we had the break above this resistance. At this point, what might be happening is the range trading. Maybe we will have some sort of correction towards this support before the price goes up. But for now, it's not that attractive to buy the euro dollar. Although the trend is bullish, I would wait for some sort of pullback. Maybe buyers will do the same. But the euro dollar does remain bullish, as same basically as the Australian against the dollar. This is just the matter of whether there will be a correction or not, which I think will take place, and we might be seeing some sort of move towards 121.20 area support. So we looked at all dollar pairs. Now let's have a look at all other pairs we did analysis for. The Australian Swiss franc still expected the strong uptrend to continue towards this resistance. You can see the price is moving quite consistently, and this tendency is highly likely to continue. Next one is the New Zealand against the Japanese yen. Also quite a bullish momentum here. We can see price is accelerating, and most likely it will head towards the resistance we mentioned previously at 76.60. Swiss franc, Japanese yen, I would expect some weakness of the Swiss franc to continue. As long as we hold resistance, I still believe this is a valid point, and we should be seeing the correction to the downside. Maybe from today, maybe from next week, but we need to hold this obviously resistance area. The euro Swiss franc, well, it certainly is very interesting. What I did like is the break above the both moving average, 200 simple and exponential, on the 1 hour time frame. Now price could be finding this support at this area. So this is a daily time frame that we originally did analysis on. It certainly seems that this is an interesting opportunity for buyers, and mainly this will be the Swiss franc weakness from what it seems at the moment that will drive this pair to the upside. The euro Canadian, it's still bullish. It seems there won't be any further decline. So I would expect this to be the bottom. And if we hold it, especially if the daily close remain above the 155 psychological level, we will see the continuation of the uptrend. So I still expect a strong bullish trend. You can see on the daily time frame, we still have higher highs and higher lows. This is clearly a bullish trend. Nonetheless, we had the rejection here, double top, and at the very least we will see once again the retest of this resistance, but of course as long as this low holds. The euro against the pound, we had this daily close below both moving averages, which I don't like. It could be risky to hold the euro pound, and considering that the probability is not as much in favor of an uptrend because of this daily close, I will invalidate these analysis. We are basically at the spot that we published these analysis, so no harm and closing and invalidating this analysis. Australian against the Japanese yen, we have reached the first resistance. We can see there was some rejection, then price broke to the upside and found the support at our resistance. Now we're heading further to the upside. I think we will test this area, second resistance area at 81.72, but maybe now it will be also time for the strong correction, also possible. While the trend is up, I think buyers would be securing the trade by putting the stop loss around this low, previously made low, to avoid losing most of the profits. So let's wait and see how far the price will get. And finally, the euro against the Japanese yen, we had a daily break and close above this resistance, which suggests that the price is bullish. Now, after the breakout, the correction usually follows. So we might be seeing corrective move towards the trend line, or even this Fibonacci support, which is at 125.90. So 125 area could be retested after the confirmed breakout, and only then price will continue going up. But as long as we hold this support area, it will remain bullish. And that's it for today. I do hope that you enjoyed the United States dollar against the Canadian dollar analysis, where we expect a pullback of approximately 200 pips. If you did enjoy, if you agree with that, smash the like, and don't forget to subscribe to our channel to follow all the analysis that we do for you. I wish you a great weekend. We'll speak to you back on Monday, so take care, have fun, and I wish you profits.